Well, today I'm going to talk about the transportation asset management plans. As a previous speaker just mentioned, there's certain requirements and hurdles that Congress and the legislature put on. So there are these performance management requirements, which is basically reporting targets, because we measure bridge performance the same way through our MBI, and we report that data to Federal Highway, and Federal Highway calculates that measure for us, and then they put it on the website, and then all we have to do is report the targets on some website that they're developing. So there's also this asset management plan requirement, and Federal Highway will be, and I'll talk about it in the presentation, will be doing these tests. Do you have these processes in place? So Federal Highway is certifying that processes are in place, not necessarily reviewing and approving a plan. They verify that the plan is implemented or something like that, but I'll talk a lot about that in the presentation. But I want to cover just when we talk about, as a previous presentation, when you look at your network, you're looking at an overall strategy. And I just want to talk about how the asset management plan contributes to that overall management strategy that you have. Basically, like I said, I'm going to talk about some of the requirements of the transportation asset management plan, because they can be confusing. But we've been managing bridges, a couple hundred years here now, and we know how we manage our bridges. So basically, we're looking at what does Federal Highway want, what format, and what do they want us to tell them, and things like that. And it's not all too complicated. I want to talk about managing a network, some of the principles that, like, we did the research and the analysis in North Carolina, Connecticut, and a couple other states. I cold called and said, look what I did, what do you think? And we'll talk about this life cycle planning stuff, which can be confusing, risk management, these financial plans, and then just a better understanding of how to leverage this asset management stuff and what we're doing. It's not meant to be a peripheral thing or an additional burden, but it does kind of integrate. So these just from the regulations and requirements, the asset management plan focuses on infrastructure condition, and the goal and regulation and Congress wrote is to have a state of good repair of our assets, our bridges and pavements in particular, and to manage it from the network perspective, and including risk and as was discussed earlier in the previous presentation, those performance targets are sort of short-term indicators of where we are. We don't manage to biannual reporting. We don't manage to every 4 years. We build bridges for 100 years. And so these are just indicators of where we are, because with the performance management requirements, we have the Transportation Trust Fund, which funds, 80, 90% of our state projects. So that the Transportation Trust Fund kept, being depleted. And so the need was that, the idea is that perhaps our forecasting at the federal level wasn't correct, or perhaps we needed a better ability to put a pulse on where we are in our system. So this performance management and this asset management approach really gets that federal perspective. So just the plan contents for this transportation asset management plan is required to have inventory and forecast of performance of where we are. So our good, fair, poor, and all that nature. Well, we only report, Federal Highway only calculates the good and the poor, so it only has those really two measures, and you set targets on those two measures, so you're held accountable to those. And as this asset management plan has these objectives, measures, and targets, so the targets are set over here, but you include references to them in the transportation asset management plan. This performance gap identification, as the previous presentation showed, we have the ability to look at our system to see what the gaps are as far as where we would like to be, what the funding needs might be, and where there's a gap between those two inputs and outcomes. So this life cycle planning topic, I'll talk about that in a second, this risk management analysis, financial plans, and these investment strategies that was also talked about previously. So just as far as some dates, so April 30th of this month, these initial submission of these asset management plans are due. And as Billy was telling me earlier that he was struggling with this, so there's some caveats to those Q&As. You came in late, Billy, so I had to call on you. So there's some caveats to this due date of this initial asset management plan, that some things don't have to be included. So this previous slide, we said that there are all these things that need to be included. So on Federal Highway's website, there's this okay, well, we know that a lot of states aren't here yet, so here are some things that you don't have to include in this initial plan. And so that's that April 30th. So check those Q&As. So I have to stay on script. I can't go rogue as I normally do at the conference. So a lot of things that I'll be saying will be on script. So November 20th, that's when sort of this transition period. So you have this initial asset management plan, and then you're going to transition your program into how you say you're managing it and you're implementing the plan. So there's this transition period, November 20th. And then there's this, when your fully implemented plan is due on June of next year, and there's this opportunity for some extension requests, and some guidance on that's coming out. That's in the law. So in August 30th, 2019, that's when Federal Highway will assess the asset management processes and figure out whether or not certify that it's being fully implemented. And just to back up a little bit, when we talk about managing from a network perspective, we're looking to, develop these investment strategies. And so, as was discussed earlier, these investment strategy requirements are in this asset management regulations. And then in the performance management area, you're supposed to assess how those investment strategies are influencing the progression towards these targets. But what we want to do is look at this systematic evaluation of our inventories and our deficiency forecast, which is similar to what this asset management plan is trying to do. So the goal of our program is to achieve that best network condition at this lowest life cycle cost. So I was speaking with Bridgeware person earlier. We were saying that, when you look at this life cycle cost analysis, or how you're managing an individual bridge, it all depends on the timing of that bridge, of that implementation of that countermeasure. So if you did it today, what would be the long-term impact as far as cost is concerned? If you waited 5 years, if you waited 10 years. So we need to do that on a bridge level, looking at this timing and least cost analysis. But then we need to look at our whole network and have this interaction between each bridge, timing and cost, on a network level. So if I treat this bridge today and not that bridge today, what will my network look like? And that's what we try to get at with most agile assets and BRM and in bias and things like that. We're trying to look at this optimization between smaller level and optimize to the bigger level. So that's where we need to go with that. So the goal is to achieve that minimum lifecycle cost for the network. And so our bridge management systems look to achieve that. So we are optimizing the network based on these periodic evaluations, of course. So the key consideration is calibrating that funding. So, with the analysis I did in North Carolina, we looked at their current funding, if they did a bond measure, if they just wanted to achieve 10% structurally deficient, or if they had all the money in the world. So we looked at those 4 scenarios. Here you looked at these optimizations. So if you looked at those 4 scenarios, so basically it's a funding issue, it's a financial issue. And I'll talk about the financial plans in a second, but the financial plans in our asset management plan strictly look at, the funding gaps. I mean, I'll talk more about it. It's not strictly, but not to go off script, but it's financial planning can take a bigger connotation if we look at the different categories that are available. There was a discussion earlier that one state, reserved a lot of their funding for some, redistribution of federal funds and tried to optimize and capitalize on that opportunity. So it's a lot more to financial planning than just that gap analysis between outcomes and inputs. But I'll talk a little bit about that. Therefore, the primary consideration of bridge projects is to ensure that network functions at the lowest life cycle cost. So the management systems have the ability to make these program level trade-offs. And as I say, we need to look at the project level, the individual bridges, and optimize to the network level as far as timing and available funding. And that's what the asset management plan is trying to get into. These investment strategies support the goal, achieving and sustaining desired good repair over the life cycle of the assets, preserving the condition of the assets and the performance of the network relating to physical assets, and achieving the state DOT targets, because the state sets the targets. Federal Highway has these goal areas, but states are not trying to achieve these national targets. There are no national targets, so each state, and it could be a declining target. if there's a situation where we just don't have enough money, there's these hurricane impacts, and we just don't have the ability to improve the condition of our system during this reporting period. So we have declining targets, and that's just the nature of how things are going. So what is this life cycle plan? So it's mainly ability to differentiate between treatment option, costs, funding and constraints, and analysis period. And we're looking at, and what is said is the entire life cycle of the bridge, so 100 years from cradle to grave. So, and we typically have been doing this with our asset management plan. Mike Johnson put out a report some years ago, a list of these are the only things we do to bridges. We paint bridges, we do this, we fix bearings. So we basically know, we have a good idea of what we're going to do to bridges over its life. We're going to fix, we were talking about these weather coating, water treating decks earlier with the RPM representative. And so we have the ability to know what we're going to do to our bridges based on historical data. And we also have some opportunities such as that waterproofing our decks. So, but this life cycle plan is more of a network level plan looking at our overall network, and that's a little different from our life cycle cost analysis. So, for the pavement area, Washington State, they know they're going to do all preservation first, and then they're going to do everything else after that. So sort of they know their life cycle of their bridges to the east of the mountains, and they know the life cycle of their pavements to the east of the mountains, and the life cycle to the west. So they apply their strategies based on where the pavements are located. So this life cycle plan is taking account of all the risks. And one thing on risk, when we talk about risk-based asset management plan, we just want to make sure we are not double counting the risk, because when we design a bridge, we're designing for seismic, we're designing for flooding, we're designing for a lot of risks. So, and I'll talk a little about that in a second. And the risk part of the plan is, and I'll talk about that. So, but this life cycle process, we're looking at our bridge assets, we're defining our life cycle strategy. So we are milling and overlaying bridges, doing some cathodic protection, wrapping piles. So we're doing all these things, and this is what we're going to do over the life cycle of our network of bridges. And then we're looking at these scenarios, and we're developing this outcome matrix of what's going to happen with these different scenarios that we have the opportunity to input. And then we provide different levels of strategies into our financial plan so that we can match up the funding, or how much we need, how short we are, or what we can do with our funding. Let me skip a couple of these. So the risk management is addressing uncertainty and variability and opportunity and threats. So we do a lot of that in our bridge design as far as seismic and things like that. So we don't want to double count those risks. So we identify, analyze, and prioritize and manage these threats. So we figure out what to do with those risks, and then we summarize those changes, and we try to look at some of the environmental impacts as well. And so we're talking about this financial environment. So this risk management provides a framework for analyzing, prioritizing, and addressing these uncertainties to achieving these performance objectives in this transportation asset management plan. So each part of the plan is supposed to be working together to achieve this network level objectives. And so I can't read this from the back maybe, but this is just this risk management process. And it's not as, if we're looking at, allowable stress in bridges, and we're doing this calibration of what the good, so it's kind of a higher level of a risk strategy than that. So this risk register here, just looking at if we had certain funding levels, what would be the outcome? And we're just putting it in a matrix to say, here's what the outcomes would be. So, and these slides will be available to get more into those. So for the financial plan, we're looking at this financial environment. So we expect to get certain bond measures or decreases in funding, or we're going to call Nat Coley. He's going to run an analysis of our network and prove to our governor that we need more money. We're going to get $250 million more in our program. So it just looks at that whole financial environment, a 10-year revenue forecast. So the asset management plan is a 10-year forecast of the management strategy. This financial plan is supposed to identify funding needs, and so this financial plan is really a look at funding and what the needs are and matching the two. So here we're looking at this, we need the inputs into our transportation asset plan, our financial information, our life cycle plan, our financial plan, the life cycle planning, which includes those strategies and investment opportunities, conditioning practices, initial targets, and later it'll be just what your targets are, risk analysis results, and this is really looking at the risk analysis from the previous slide you saw is looking at what we expect that we will need and what the gaps are. So we're looking at that from that perspective. And recommendation from other plans. So this asset management plan doesn't just, it's just not out there by itself. It does fit into the long-range planning and the planning documents as well. So, and then there's there's been some questions about this sites repeatedly impacted by weather events, this 667 requirement, and I'll be putting out some guidance on that as well. So that's supposed to be included in this plan as well in the performance gap analysis. So just some steps in developing the financial plan. It's not one comment I made to someone, a bridge engineer, was don't overthink it. It's just not. It's not too difficult. It's more of the processes. So if you look at the Q&As on the asset management website of Federal Highway, you'll get a feel. I mean, it repeats the law a lot. If you read the law and then you ask someone about the law and then they repeat the law back to you, but there's some caveats in there that will help to understand that this is doable. So here's some resources from Federal Highway. And every question you could possibly have, because one thing we've been doing is capturing those questions and getting these Q&As up to date and putting them on the website. So the Q&A should be your first stop, because someone else has asked a question that you already have. And then there's a wealth of, prolific amount of resources available to guide you through what needs to be done. So.
The preceding was produced by the National Center for Pavement Preservation. More information can be found on the web at pavementpreservation.org. Additional support provided by Michigan State University.